less optimistic than they were in 2018. What is behind that? What are the reasons for that drag on optimism?
So it's true that there has been a drop in optimism, an 11 percentage point drop from last year, but it's still 54% of respondents across China have an optimistic view when they look for the year ahead. And that is driven by the market potential that is across China at this point in time. There's a degree of positive reaction to regulatory reform and opening. We see a third of members have noticed and identified business opportunities and market opening through the last year in their sectors, and that is driving that optimism. But there are still challenges in the market, and that includes cybersecurity areas. Those areas are things that we are still focused upon, but the optimism is really palatable right now.
In terms of the level playing field and market access, it's a kind of cliched term that both sides have talked about, and the Chinese side would argue that things are improving. They've got the foreign investment law kicking in January of next year. Are things starting to improve in terms of market access for your members?
That's certainly what the sentiment survey indicates. One of the interesting points that surprised us in these results was the top three challenges that companies were facing. Last year, IP, protection of intellectual property, was number 2. It has dropped out of the top 10 list. And I think that speaks to the positive work that the Chinese authorities have done, not just over the last year, but it's a number of years of reforms coming in through that we're seeing it really trickle through into the operating environment here, giving greater confidence for companies to come in with their intellectual property and actually engage here.
It doesn't mean if you sell to China, you have to make things in China as well. And we talk about how companies have been diversifying their supply chains, not just because of what's going on, obviously, on just on the trade war front. Have you seen more of that this year? And where have you seen that supply or that manufacturing capacity move to?
Well, certainly it's evident that a lot of companies are looking and evaluating as part of ongoing business what they need to be doing with their supply chains. What we can see from this sentiment survey that we've just completed and are releasing today, that optimism is very strong here. Now, there are certainly companies that are looking to diversify, whether that is into Southeast Asia, in the goods space, but it's also bringing it back to the makeup of the British business in China. We see that about 62% of members are actually in the services space. It's only 38% that are in the goods environment here. So within the professional services and the service delivery, we see a significant amount of companies still engaging, and that is not about moving businesses offshore into other markets within the services space.
And St. John, of course, we're looking ahead to this UK election, a lot of talk of Brexit, obviously. Do you think, if the UK does make an FTA with China, for example, is that necessarily good for UK businesses? And what sort of competitive edge could they have with EU exporters, for example, too?
Well, we're seeing a strong increase in trade from the UK into China. I think the latest numbers indicate trade across the Chinese mainland and Hong Kong almost reaching 100 billion sterling during the 12-month cycle up to July this year. And that's a significant increase. It makes China one of the most critical trading partners of the UK. In a post-Brexit environment, when we asked our members, is that what would they feel? Would it produce genuine benefit to business here? Nearly 50% of people that are already engaged in China operating here feel that there would be a strong benefit to a free trade agreement should we be able to negotiate one.
St. John, when you talk to Chinese officials and your Chinese counterparts, what do you say are the key priorities then for your members looking to 2020 and beyond?
Members want a competitive neutrality. They want a level playing field.
And that's still not happening?
There is evidence that the state-owned sector is getting strengthened, and that is called out in the results of the survey. That's the third biggest concern, is that the rising state-owned space. And that is something that we continue to talk to officials about. How do we create that level playing field? But I have to sort of put that in context that even with all of that sort of concern there, still obstacles. We're not saying that this is a beautiful environment. There are still things that we need to work upon. But the optimism is there. We're seeing it when we ask members in the year ahead, will you increase investment? 60% of companies are still saying they plan to increase investment. And that's on top of the companies that are basically standing still on their investment plans for next year.